Good afternoon, everyone. Brian Hoops here with Midwest Market Solutions. This is the closing market commentary. As you can see, today is January the 16th, and we always want to mention to you that everything that you see here at Midwest Market Solutions, including this video commentary, is copyright 2014 Midwest Market Solutions. We also want to let you know the risk of loss in trading futures and options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results. Trading advice is taken from trades and statistical services and other sources that we believe are reliable, and we do not guarantee such information is accurate or complete, and it should not be relied upon as such. There's no guarantee what we're going to tell you is going to develop into profitable trading. But we're going to take a look at what's going on in the markets here. Let's take a look at today's closes. March corn up a penny, December unchanged, while wheat had a rally. 4 higher Chicago, 9 higher Kansas City, and Minneapolis up a dime. Soybeans were higher through most of the day. You notice this bar here, how we opened mid-range and then rallied all the way to resistance, 1330.5. We're going to talk about that chart in a little bit more detail here in a minute. Closed near the lows, actually 3 lower, while November was up 5. And meal was lower while oil was higher. Cattle futures only higher in the February contract today, following the cash trade up 47, while the rest of the months were just slightly lower. Feeder cattle were lower. Hogs is another market we want to talk about. 25 higher in February, 70 in the April, and the back months had a rally except for August, which was down a dime. So let's look at what's going on, and already set up here on the hog market. So let's look at this. This is the chart of April. Notice how we peaked out here in October and then started a little steady downtrend. We like to draw some downtrend lines on our charts and take a look at them, see what develops. Here we can draw a trend line, and what we'd like to do is start with a high and then at least find one, maybe 2 points that we can draw this trend line off of. So there we have 1, here we have 2. In fact, we were able to use 3 other different points off of this high. So we know you now have a very nice downtrend. We have a support area down here. For last video, I think we used the target shooter to determine where this downtrend market could go to. Right there, which developed as support, our first target of 90.20, which ended up being support. Now we've got April clearly closing above this downtrend line and above this 92.30 resistance. This should be resistance. We closed right up into it at 92.25 today. So this is a market to watch out for, that we're changing the trend and going to start moving higher. If we look at video snapshot of July, we're pretty clear in an uptrend here. We had the high back in October, pulled back, but then just kept steadily increasing and rallying. Markets in an uptrend. Look at above the 50-day and above the will trend signal. August, October, December, all pretty much the same charts. February of next year, all pretty much the same thing, telling you that everything else is in an uptrend except April, which looks like it's just started to be, and February, which we can draw this trend line here, 3-point trend line, still below in a downtrend. Got to get above this area to make the uptrend develop. Look at the cattle. My gosh, look at this. Last couple days, big blow off here. We used a target shooter from this high to this low and projected to go for at least to 138.05. We eclipsed that, and then we rallied all the way up to 141 even. Very likely we're going to get to this 142 target at some point, but it could be a blow off in here. But certainly looks like we're extremely bought from a technical standpoint. I like to use these nice triangles or rectangles, show a little box of where we had some congestion. There we had a little congestion. I know we talked about another target shooter one other time. We ran it from this high to this low, and it projected the high and low range of these targets. This is a Fibonacci 62 and 50% projection. So right in that area, and then a breakout. Here we have, we'll get these out of here to make it a little bit easier to see. Here we have a downtrend line, clear, and we broke above it back at the end of December, and a sharp rally has ensued. We can look at April and see pretty much the same chart pattern. developing or has developed as the April. Of course, February is the lead, tied to the cash right now. If we use the downtrend like we did with the hogs or the February cattle, we broke through the downtrend end of December and have rallied since. So yeah, this is a market that still obviously in an uptrend, maybe a blow off top. Nobody knows for sure how high this could go, but certainly looks at it like major top there. All right, we'll look at the soybeans. Pull up the March bean contract in here. We talk about these downtrend lines in hogs and cattle. Here we can draw kind of an uptrend line from August through these lows that were made in January. This is the 1260 area that we identified as good support. Here we got a little downtrend line, couple point downtrend line. We rallied almost right up to it perfectly today and pulled back. This chart could be similar to what we see in the cattle. A breakout either above or below the triangle, the wedge, whatever you want to call it, would indicate a major change of direction, either to the upside or a resumption of a downtrend here in this market. So you can make a case that we're in a downtrend, we're in an uptrend, we're in this wedge pattern right now, looking to break out, and it looks like a pretty big significant move is coming in the beans. Go with the breakout. The corn market, we could draw all kinds of little trend lines on here. Here you have a short-term one that we broke above on Friday, but now we're trading back below it, so it could be a false breakout is what it looks like. We have a little flag pattern here. It looks like this is a reverse flagpole and a flag hanging down in the wind right here. Sometimes this can be effective for watching chart breakouts, but you measure the top of the flag to the bottom, and that is a high of around 436 to a low of 425, so 10 cents. Add that to your breakout of 430. You're looking at a rally back up to 440, and probably right into this resistance point is where we could see a rally in corn if we break above 430. So don't get too bullish, but that's likely where technically the corn market is headed. All right, we're going to sign off, but hope you've enjoyed this commentary. Feel free to give us a call if you have any questions. Good luck, good trading. We'll talk to you again soon.